Kenya's central bank is the latest among sub-Saharan African economies holding their interest rate unchanged from Nigeria to South Africa to Kenya and Ghana. Lending rate left at 10% by the Kenya's central bank on Monday, saying inflation was expected to remain in the government's preferred band in the short term. Year-on-year inflation fell to 6.4% last month from 6.7% in November, remaining within the government's target of 2.5 to 7.5%, and that makes government treasuries and bonds for the Kenyan government very attractive to investors who want to buy them. So let's bring in the head of banking research at EcoBank Group Kenya, George Bodo, to talk more to us about this latest move. George, it's good to have you on the program via telephone to Nairobi. George. A good afternoon to you. Yes, a good afternoon to you, George. Okay, now let's get straight to business. The Reserve Bank decided to leave policy rates unchanged. As the market priced in this move, or the market will start to react to it?
Essentially, I think we've been cautious about everything else. I think the FX markets have been very volatile. We've seen some level of in the USD Kenya exchange rate. So I think we're taking some caution on that point. The second issue is also that the consumer prices, there's an element that there's an indication that consumer prices could be coming to upward pressure because we are having a drought in the country and food prices are already going up. Especially the basic food prices. It's about to May. The base and the other basic food, the price is already edging up. So I think monetary policymakers should take some caution out of this. But I think essentially maybe they took that into account on the two fronts: FX market volatility and upward pressure on consumer prices.
Well, let's stick with the banking sector where you belong, George. Last year, the government imposed the limit for commercial banks lending at 400 basis points above the policy rate. How much impact has that had on private sector lending and economic growth in Kenya in general?
I think we've had a supply issue, serious supply issues since the promulgation of the law. Number one is a number of banks. Actually, most banks have killed some key products that used to drive balance sheets. Number one is unsecured products, and unsecured products are dead. And with it, they've had to also send off staff that is associated with those unsecured products. For instance, we had banks sending off business originators around unsecured SME and personal products. We've also had branch support for these things, and we talk about the analysts and the credit monitors. All these guys have had to be sent home, and we've seen a lot of we've seen banks pronunciations around banks sending home staff. Essentially, it's linked to killing off of some of these products because in an area with cap, then if you can't price an asset, depending on how you perceive the risk, then you rather not do that product because essentially the bank's not comfortable with the pricing, they're not comfortable with the rate, they're not comfortable with the fact that the pricing doesn't compensate for how they perceive the risk, how to kill out of these products. So that's what you're going through. And with it also, the problem is that if you cap risk pricing, it does also set a floor on funding costs. Banks or pricing who have been funding the balance sheet at double digits are having problems at the moment now.
Okay, let's leave it there for today. Thank you very much. George Bodo from Nairobi, who is from the EcoBank, head of banking research at EcoBank Group in Kenya. Let's stick with the Kenyan economy, this time in the telecom sector, where the giants listed on the Nairobi Stock Exchange, Safaricom, wants to meet growing demand for online streaming services like Netflix by building up its fixed data network and connecting homes to the internet. The company has until recently been focusing on mobile internet access.
The fixed data market in Kenya is dominated by Wanchi Group's Zuku brand and Jamai Telecoms. Safaricom, Kenya's biggest telecoms company, has until recently been focusing on mobile internet access it is 40% owned by Britain's Vodafone.
We've been a bit lazy in growing our data business. The half year we showed it was something like 40-ish, 43% growth, I think. If you look across the continent, that's we're a little bit of laggards. The continent growth on data has probably been closer to 51%, 52%. Across the world, it's more like 60, 62%. So I think we can do better in this space. And that suggests, therefore, that the data potential in the market is huge.
The CEO says its investments in the fixed data network were a reallocation of its budget and would not add to its planned capital expenditure. Safari's capital expenditure in its year to end March is 32 billion shillings.
People want to have, ideally, unlimited data. Unlimited data on mobile is not economically viable in the long term. So we're using fixed to give you the data access in the home, and then when you're roaming. What we're finding now, there's lots of solutions now for delivering data for customers. There's a lot of competitors out there. People tend to fixate on just the big three, but there are a lot of guys who are now providing Wi-Fi.
Safaricom had already connected 6,000 homes to its new fixed data network using fibre and poles. The move was driven by growing local demand to download or stream content such as Netflix science fiction drama Sense8, which has some scenes shot in Kenya. Safaricom has also partnered with Showmax, an internet-based video service owned by South Africa's Naspers, to recruit new customers in Kenya.
People don't want to just have access to the internet. They're also going to want to be downloading content. And if you're downloading content, you're downloading movies, even short clips on mobile data, it's going to be relatively expensive. We're kind of pretty close to our cost base on our price of data. So we can't really go much lower than that at the moment. Over time, it might come down. So we want to give people a solution that they can use. You can access a Netflix movie or a Showmax movie, whether it's on the TV, on a tablet or on the phone.
Safaricom spent $25 million on a license for the provision of fourth-generation 4G internet, and it has rolled out the network to Kenya's major urban centers.
Tunisia is one of Africa's economies looking to raise external monies in 2017 to plug its budget deficit. The country's finance minister says Tunisia will need between about $2.85 billion in external financing in 2017 and plans to issue an Islamic bond called Sukuk of about $500 million to help cover the deficit. The finance minister says the Tunisia plans to sell 1 billion euro bonds worth of debts and will get on a roadshow from February the 5th. That'll be sometime next week. You don't want to miss that, do you? Do have a great day, everyone, and thanks for watching. I am Busina Mafaye in Lagos. Bye for now.